The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate your growling and prowling with us out here. Right now, we have the Dow up 44, Nasdaq's up 2, S&Ps are up 5, gold's trading down 480 and 1197.80. We have silver down 7 cents, $16.85 an ounce. Oil's up 68 cents, $48.40. Now, oil's getting hammered. 10:30 today, oil numbers out. Bottom line, if they only can sell oil in Chicago, it's 18 degrees. They'll sell lots of oil in Chicago, man. No doubt about that.
Nice transition. Totally, man.
10-year note up 2 ticks, 122.30. 30-year bond up 11 ticks, 147.06. Good old King dollar down 44 ticks, 101.530.
And who do we know that in Chicago?
There's no doubt. Our man, Mr. Kevin Hinks. I heard he's got his big bear coat on, a whole ball of wax, TD Ameritrade. Thinkorswim every trading day right here, folks. You want to know options upside down? 12 to 1 Eastern Standard Time.
It's 50 degrees here right now, so it's not like it's we're glowing in the sun.
No, we're not. Kevin Hinks, what's going on?
Good morning, O'Brien family. How's everybody doing?
Hello, good morning.
We had to give it to you a little, Kevin.
The good news is the snow has stopped. The bad news is it's 18 degrees.
I said to my dad as we were getting ready, and I said, I think Kevin said that it's 18 degrees to our producer in there, Steve, as he was getting ready to jump on the line.
And by the way, folks, it is spring training.
Yeah, I know, right? I know.
Opening day in 2 weeks.
Yeah, how about that? In Chicago, too.
They're ready for those Cubbies, I'm sure.
That's going to be great. So, hey, market-wise, we got the Fed out here today, going to be yapping at 2 o'clock. It's going to be wild watching as to, I guess the quarter point is baked in. The real question is, I guess, what are they going to say, right?
Right. I think all the attention now, Tom, looking forward goes to her comments after.
Yeah.
Right? How does she set the pace for the rest of the year?
Right.
I think that's what we're going to look at. Is this quarter point in? Yeah, of course it is. Right? So, we'll see.
I know.
We'll see what she says, and we'll see. I'm interested to see how these bonds react.
Listen,
the last 2 times they've raised, the bonds have rallied.
I agree, and it's like watching them is like, oh man, they haven't broken down, but boy, they're close. You know what I mean?
It's interesting because every time it's been the market's known for sure, and it's almost like they've wanted more in the statement every time, and so it's actually been, anytime they've raised, it's been like a little bit of a letdown almost, because it's like, geez, we want to hear, or we're expecting maybe to hear that we're coming with some rate hikes.
We're coming with Armageddon.
That hasn't happened at all, right?
No, I agree.
Yeah.
I think the key news item from today is going to be her comments at 2:30 Eastern.
Yes.
And how she comes out of that press conference.
Yeah, no doubt. And folks, when we take a look at, we almost had the VIX moving a little. Yeah, well,
we're under 12. That's all right. Perfect.
It's so funny, folks. Okay, the VIX hasn't moved that much, but actually,
when we looked
it moved 10% yesterday.
We were taking,
yeah, the VIX is all the way up to 12.
I know.
I mean, officially, is it overbought here at a 12? I mean, I haven't even. I don't remember it ever being in my. I don't have that good of a memory. When's the last time it was over 12?
Listen, there's no doubt, man. It's a unique time.
And I think I heard today's, I think, the 3rd rate hike in 11 years or something like that. And when you put it in context, it's pretty wild.
Exactly.
Yeah.
And by the way, it's not like we're going from 8.5% to 9%.
Right.
We're going from 1/2 to 3/4.
I know.
Yeah, so we don't even we don't allow ourselves to even call them rate hikes here. We call them normalization.
Yeah. Well, it makes sense, And folks, don't forget, every trading day right here, 12 to 1 Eastern Standard Time. You want to understand options upside down. Scott, Kevin, they got a great program.
What's going on today? I was just going to say with the Fed. What do you guys?
Today, as well as focusing on the Fed, we're going to talk today about the age-old question: do you buy a vertical spread or sell a vertical spread?
Nice.
Okay, cool.
And what's the difference between the two? And we're going to go through that. And then, most of all, I'm just glad this day's here. Let's get it going and get moving here.
Yes.
You know, sitting around waiting for this to happen is killing me.
No, there's no
So
doubt.
let's get going.
And, folks, when we're talking vertical spreads, please listen to the program. Because if you like options, I think what ends up, I know what happened with me. As soon as I caught on to spreads, I loved them. When you start catching on to the vertical spreads and you realize that, this is like the single and double on a continual basis.
I learn stuff all the time. I mean, even Kevin, like a couple weeks ago, Kevin, you guys be talking about, you shouldn't be always just buying on the offer or the bid. You should be going in the middle of those markets and how options are not like, equities maybe. And you're just learning stuff like that all the time. Seriously, that was a wide open where I was like, oh, man, I should never be looking at the bid. You should always be maybe middle of the market. And you said sometimes those market makers out there, right, Kevin, they just have orders where, maybe middle of the market or better. They'll hit you, and you get executed instantly. Everyone doesn't know that. I didn't know that. It's just great information. Seriously.
Right. And all it does, it takes you a little more time. But think about it over a year. If you work every single order, and it can't be measured. Right.
Kevin,
the key to this business is chasing every penny.
Yeah, no doubt.
And committing it to a daily practice, and then you look at it over a year and see how much money you've saved.
Right. It's amazing. What I love what Tommy said, and you being the market maker in GE for years. So this is what I've done on a continual basis, right? I'll lay the order in there, right? And I lay it right to the close, and I know myself. If you don't have enough business, then okay, I'll take it at the close.
Okay.
Right, exactly.
Isn't that funny? I know.
Right?
12 o'clock right here, folks. Right on your phone, TFNN.com. Hit Tiger TV. Kevin, have a great one, a safe one. We look forward to the show.
Thanks for having me, guys.
Absolutely. Stay right there, folks. Tommy and I come right back.
Started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien. We do appreciate you growling, prowling with us out here. And Fed Day. So
totally,
this is it.
Like Kevin said, I'm kind of, I bet everyone's kind of excited because basically you're just a little bit nervous that everybody kind of knows, but you just want to make sure that you can look past it, right? As in that there's no surprises probably before. So at least it'll be off the table. It'll be done. There'll probably be a quarter point. But why don't you pull out the Fed funds futures?
Exactly.
What's the? I'm sure it's at least 100%, but I want to see what the odds of a half.
The next one is right.
So now it's only 4%. Yesterday it was 6% that there was a half-point hike.
Okay.
Yeah, remember that when we were going over
it?
It was 94 and 6 yesterday.
Right.
So whatever. Still about the same thing.
And then what has happened though is that look at this on June. So what we're looking, folks, is that we're looking at the world interest rate probability. Basically chart
futures,
on a Bloomberg terminal.
Sure.
And May has it that, it doesn't look like there'd be another rate hike right after it. There's only 12% chance.
Yes.
June is 56%. It was 50 yesterday.
Agreed.
So that's gone up quite a bit.
Yeah.
And then they're going to have 1, 2, 3, 4, get 4 more meetings after that,
Yeah.
to go up again.
And the market's pretty much saying there's about a 33% chance, about 1 out of 3, that sometime between September and January that you'll get a third hike right now.
Yeah. And so if we go over and
you can see how funny it is how the conversation truly has so leaped past 1 rate. We're talking about the odds of 3 rate hikes come September.
Totally.
Yeah.
And so right now we at the 10 years at the 2.58. The high was yesterday at 2.62 or the day before.
Yeah.
30 year is trading out at 3.15.
Yeah, and so you can assume that the rate, is priced into there, at least a quarter.
Oh, yeah.
A half would definitely, as they're talking about in the den, and that's the only thing that everyone, just wants to see if they'd shock the market with a half a point, I think.
Exactly.
Or shock the market even with some really strong rhetoric, right?
Yes.
Yeah.
There's no doubt. Okay, so let's take a look at the consumer price.
U.S. consumer prices,
yeah. So the U.S. cost of living index rose in February while prices increased from a year ago by the most since March of 2012, reinforcing the view that inflation is in line with Federal Reserve's goal. The consumer price index climbed, 0.1%?
Yes.
From the previous month, I see.
Yeah.
After a 0.6% January advance, that was the largest in nearly 4 years. Compared with
there you go.
Compared with February of 2016, the CPI was up 2.7%. So that's big.
That's year on year, right?
Yeah. That's right. They're looking for 2% basically.
Yes.
The figures are consistent with the Fed's inflation objective and combined with the labor market at or near full employment help explain why policymakers will probably rise interest rates later Wednesday. So.
So the Bloomberg estimate was from a rise of 0.1 to a decline of 0.2. So it was at the top of that range of the expected.
If we take a look at some of the, well, first, let's go into the Dow, see what the strength versus the weaknesses inside the Dow. Okay, so the leader out here is United Health. That's putting 9 points into the Dow. You get Goldman putting 5 points. United Technologies putting 4. 3M putting 4 rather. Taken away from it is Walmart putting taking 3.7 points out.
Yeah, just some marginal.
Yeah, nothing big. Inside the NDX 100. Now, it was interesting at the open here. Let's go on the NDX for a second. So the NDX putting strength into it is QVC. That's up 1.8%. Mondelez is up 1%. Is that Autodesk? Yeah, Autodesk up 1%. Amgen's up 1%. Taken away from it is Insight. That's down 1.8%. Express Scripts is off 1.5%. Micron Tech's down 1.4%, and Seagate Technologies down 1.3%. What did I just say we were going to go back to? Okay. Oh, I know. The NQM. So what had happened right before I was doing the, see, the first sell came down on the NQs right at the open. Right before the open, actually.
It went from 920 bar, yeah.
Yeah, and
can you go back and zoom in, sure. I just want to see what that big bar is actually.
Yeah, so the first one got it at the open. We went from
okay, so that's the 930 bar.
Yeah,
okay.
53.97 to 53.87. And then you're getting some more pressure. Now watch this. This is what was intriguing, I thought. You didn't have that bar on the S&Ps.
Sure, yeah.
So this is going to be, I guess you had a little, but
nothing like that. Though.
No, nothing like that.
Stick out. I mean, because we're basically at where we opened.
Yes.
Just to put things. So
right.
We're not there in the NASDAQ for sure.
And if we go over to the IWM, now what happened with the IWM yesterday was interesting, folks. And this is what it is. You broke the swing point, but you broke it with 30 million shares versus 35 million. So 30 million shares, we got to a low out here of 134.50. Yeah. You were going after the 134.89, but you can see the 35 million, so it didn't have it. Now, it's going to be cool here watching, and this is what it is that, you're coming into 34 million at 135.78 to 137. So if that fails up here, then that's still saying it wants lower price.
Sure.
And there's no doubt that I expect what we're going to see here as we get closer to the 2 o'clock. It's going to be all about these currencies, man.
Yeah, for sure, definitely.
The currency.
Let's see what the bonds do, notes,
right?
Oh,
yeah, the bonds, the notes. The dollar is just laying there flat. There's no two ways about that. Oh, look at that.
Gold's right at 1,200 on the dot.
Yep.
We'll see. I'm sure that can have some volatility.
Oh, that's going to have some big volatility today because they hammered the gold stocks again yesterday. They hammered them coming right into, well, wait to see this, okay? So if we go to the GDX, now, they didn't break lows, okay, but what you're going to see is,
quite a day.
They got as close as you can. GDX went from 22.19 down to 21.26. Now, your characteristic is 82 million versus 80 million. That's a close one, man.
Yes, definitely. Right.
Now, the cool thing here is this. This is what I've found is that when you're looking at the characteristic of, I call it how you're pushing against swing points, because we had held last week, right? You held really well. I mean, because you're holding against 142 million shares.
Sure.
140, right? Yeah. So when you get something like yesterday, it's pretty cool. It's scary if you're long, which I'm long, okay? But what happens is that it's good because there's another flush that's going right against the same point. Like,
sure.
Oh no, because people are buying, they say, oh no, it's not going to happen.
Sure.
They're going to destroy the thing again.
Yeah.
Because there's no doubt, like a couple of targets are saying, hey, we could have jumped the creek, and we absolutely could have jumped the creek this morning.
Sure.
And jumping the creek, folks, means that you open gap down.
Yeah.
Because that would be, I would say, hey, you're pushing in there with volume. Do you know what I mean? You get an expansion of volume. So for all us, metal
that was an important
bulls
level,
out there.
right?
Oh, listen, it ain't over yet, man.
No, it was an important level. It is an important level.
Yes.
There you go.
Yes.
Right.
Yeah, no doubt. Our phone number is 877-927-66. Oh, crude numbers. How do we forget this?
I know.
Oh, no. I'm yapping away.
That's all right.
And
we'll have an active 3 minutes.
Totally.
Everyone can go download a demo account on Nadex, and they can be up by like 5 minutes so that as we're talking about it, when we come back from the break.
Okay, you stay right there. Tommy and I come right back, folks. Dow's up 40, Nasdaq's up 5, S&P's up 5.5. We're going to break back. If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage
percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's take a look at...
I know, it just jumped off there, but crude oil inventories fell 237,000 barrels.
Okay.
Was the headline. We'll jump to take a quick peek at oil. Here's the live chart. And we're at 48.70 prior to the news. And we took a quick peek, and it was lined up at about $42 combined for the 2 contracts. So we decided to hold off, and we've been playing around with, we said maybe today you could have done a daily oil, which expires at 2:30, which is a little bit unfortunate because that's right when she starts talking. But the announcement comes out at 2.
Right.
And that could just add a little bit of volatility. And if you wanted to do that trade, it was looking like it was about $56. Here's the kicker on that one. From 48.50 is that when you do the dailies, and why not, we'll just pull it up real quick. The dailies, we're looking right here. You're dealing, not these, the 230s here. With a $3 spread.
Right.
Which, who knows? Oil's had some volatility recently. Not really to do with the Fed, but just itself.
Oh, for sure.
Yeah. So we'll see where that shakes out. We're at about 48.60, only 10 pennies away from
what is cool, and we were just bringing this up, so we're just talking a volatility trade there, folks. So what will happen also is that you could take a look at that Nadex platform at 5 minutes or 2 today.
Definitely, yeah. 15. You don't have to go till that.
No, you don't.
But
you can go earlier.
Prior to the news, definitely.
Prior to the news, and that would be you'd be doing your trade either in the indices.
Sure. I mean, we can even take a peek.
Or the dollar.
We can even take a peek right now and see where some of them line up. Let's just jump around. We haven't even started.
Right.
So, what index do you want to take a look at? Let's start there.
What do you think?
NASDAQ. Okay, so we'll be looking at...
I suspect that's going to be the most
Sure.
volatile.
Now, you have 2 options, right? You have the dailies, the big ones, which are going to be the 40-point NASDAQ spreads to the 80-point monster. You also have these, which are going to, I believe, be 30-point spreads. Yeah, now they get reset at a different time. So right now we're trading at 53.86.
Yeah.
So they have 53.85s. Now these are 30 points again.
Right.
But let's just see where.
And what's going to happen is that the closer that you get to 4 o'clock, of course, the premiums are going to come out, but they will juice some premiums in them. They should anyway.
Sure, and you know what? There might not be too much premium pulled out of it prior to 2 o'clock. There'll be some, but a majority of the premium might be priced in, having to do with the Fed, of course. So here's let's order these left. The short one, you can even do both sides, right? We're
yes.
trading
That would.
So this is where it gets interesting. When we're only dealing with 30 points.
Yeah.
If you're taking both sides, 30 points in the NASDAQ from where it's trading at right now is not a substantial move, right?
No.
So you're going to get that a lot of the time. I'm just prefacing it because you're going to see how expensive this is actually when you're dealing with these 30-point spreads. Because you're going to be paying almost 10 points out of the 30 on each side.
Okay.
So this is actually a high probability trade, as in you're going to win more often than not on this because you're going to be putting up like $2 to make $1. Right. You're going to and we'll go through it exactly. Not quite, but exactly. So we're right almost at 53.85, which is going to be our
a nice place to be.
Right.
Okay.
So we're not paying much intrinsic value on either side. We're just paying premium on both sides.
Right.
So we'd be selling the one with 53.85 down to 53.55.
Yeah.
There's our 92 to make 280.
Yeah.
And same thing would be buying the one that's 53.85 up 30 points.
We're spending $200,
and we're spending 87 there. Okay, so combine those two, and we're trading 179. So give or take 180 to make the 300.
Yeah, 180 to make.
The 300 is the full value. Right. You know, that one of these. So you need 18 points away from 53.85.
That's pretty cool, man.
Yeah. So now let's jump around again. So those are the 30 points, right? Let's see where, and it was just nice where they literally lined up to the penny. And let's see if these have 53.85 as a pivot point. No, so that's where you want to be able to jump around. These gets reset at a different time.
Yep.
They line up perfectly with different strike prices, spread prices, floors and ceilings. And then when you look at the dailies, though, you're dealing with slightly different numbers here. Right? You're dealing with 53.90. Now, that's not the end of the world, okay, but let's see how these go. So 53.90 is going to be your pivot. So you're going to have on this one a little bit of value to the short side because you're at 53.85.
Yes.
And the ceiling's at 53.90. And when you're dealing with, and we'll go short ones on the left and long ones on the right. So short one from 53.50, you're selling it. There's your value.
Yep.
That's going to be the expensive one.
119.
And then this one, you're actually 5 points out of the money. So this is going to be cheaper.
Yeah.
There's 80.
$80,
But you can see how
still 200.
200 now. And that's because you have value on one side. You're forced to pay intrinsic value and the premium. Whereas on the other one, the fact that it lines up right at the ceiling and the floor, you're just paying premium on both sides. You have no value actually built into them.
And you know what's going to happen here too, folks, is that depending when you put the trade on, there'll be new boxes, and there's a 1 to 3, which would be
for sure. You can trade that.
1 to 3 is going to be a beauty.
Yeah, 1 to 3, and now those 10-point NASDAQ
Those
spreads?
are 10 point.
Okay.
Yeah, so I wonder how that's going to shake out.
Yeah, so you might be paying 2.5 points on each side. You might be paying 3 points on each side. So you might. I
like that one. Because you could pile in a little bit more. I think because you're going to get 10 points. Well, I think
they're somewhat similar. They are. They are. But I know what you mean in that you can achieve the full 10 points on either side.
It seems
relatively right. Coming in, especially trading the 1 to 3s maybe.
And you know what? So whether you're traded or not, folks, you should look at that aspect.
That'd be a good time to see
what happens.
Familiarize yourself with how the premiums react around big news events.
Right.
You know, watch how these are priced at 1:58 p.m.
Yes.
Watch how they're priced at 2:05 p.m. and then watch how they're priced at 2:45 p.m. after she starts talking.
Right.
And kind of reveals where, and you'll see how. It's great. And let's just jump back because I like how the 53.85s line up because you can really see automatically there's no value in them. All the value. So we're looking.
There it is right there.
There's the short one.
It's a 40-pointer, right?
These are 30.
Those are 30. Okay.
These are 30. They just happen. The ones that get reset later in the morning at 8:15.
Okay.
Those are 30 points. So again, 53.85 indicative index within 0.067 of the. And when you're buying that right now, you can see 53.85. You're paying $88 out of a possible 300.
Right.
So that's all premium.
Sure.
You have no value. This expires right where it is right now.
Right.
Yeah, you get 40 cents. You know what I mean?
Yeah,
You're talking
exactly.
about. So that's a cool way to really understand how things are going.
No doubt. Our phone number is 877-927-6648.
So what's going on with gold today?
Well, we'll see.
It's not going up, is it?
I'm on the same box.
Yeah, that 1,200 to 1,250.
box is my box.
Well, that was a nice bar just a few minutes ago.
Yeah. And, well, what happens here, too, is that now this box here in this trade, folks, I'm not going to get the aspect of the announcement because it closes at 1:30.
Good point.
You know, but it's important to know that before you go in, too.
Definitely.
You know what I mean? But I knew that. But I kind of liked how it was trading this morning. Well, I liked how the dollar was trading. You know, the gold wasn't giving me as much clue as the dollar. The dollar just couldn't handle higher price. I like how it came down yesterday. And where I'm going with this is that it's like, okay.
And I can see that you got in right kind of at the beginning of this bar here too. This final red bar.
I did.
This lower 11.99.
Yeah, right.
That's why you got in at 1202.65.
Yeah, I paid, and I paid a little bit more today.
It's mostly premium though.
Right.
You know, it's like you're paying only $26 per contract. It's mostly premium, but you know what? I mean, these big bars are good bars to see when you're paying just $2 in premium and you're really just looking for a 5-point move, 6, 7, 10-point move would be huge. Yeah.
You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 39. You get the NASDAQ up 5. S&Ps are up 6.5. And we take a look at these oil numbers. You know, oil hasn't moved, and it's pretty amazing what
so
they were
there was
looking
a decline of 237,000 barrels. The median estimate, excuse me, was a rise of 3.1 million barrels, somewhere in that.
Right.
So, yeah, you know, they thought there was going to be a surplus. There's 3 million less barrels. The price should rise, and we're not seeing that. We're 10 cents actually below. Said, you know, if you can't bust them up, what do you say?
You bust them down. And, you know, what you have there, too, you can imagine, you know, like Tommy we were talking at the break, and it's like, hold it. You know, imagine if you're long, and you're looking and saying, hey, it hasn't moved.
There's 3 million less barrels.
Yeah.
The price of oil should be more expensive.
Going up. Right, and it's not.
And they're like, sorry.
Yeah,
we're still going down.
We're still going down, and that must mean that there's actually more oil hiding somewhere. You know?
Yeah, and you know, we're just jumping around. This is a live feed that we pull up sometimes on Bloomberg, and you know, U.S. domestic output is growing year on year.
Yes.
Domestic output at 9.1 million barrels a day last week, highest since February of 2016, up 21,000 barrels a day even from last week.
Now, you know what's so cool about that? Check that out. So 9.1 million barrels a day, folks, right?
And here's just the chart underneath it as you go ahead, so you can see it visually.
The Saudis are doing 10 million barrels a day.
Right.
That's pretty impressive.
And so that's right.
That's the largest oil producer out there, right?
I said during the break, you know, I don't know the importance of all of these tidbits that they fly across here, and there's a lot of cool stuff. But yeah, you know, maybe this is a huge deal to some people.
Right.
Maybe that's why it's not tanking right now, because they're saying, you know what, there's all this talk about OPEC. Meanwhile, we're ramping up 20,000 barrels a day from last week.
Yeah.
That means in a month you're up 100,000 barrels from previous.
No, totally.
I mean, just about, you know, that means in like 3 months you're up 300,000 barrels. That means you're approaching 9.5 in only 3 months. You could be so in like 6 months you could be at that 10 million barrels.
Right.
That could mean something, right?
Big money.
Yeah.
You know.
Yeah.
And of course, what ends up happening is that when you start talking millions of barrels a day, and then, you know, you start talking the price point of $48, that's still a fortune, man.
Oh, for sure.
Yeah.
You ever see how many cars are on the road? It's amazing, man.
Every time I look at cars, I'm interested in the oil business.
It's March. It's beautiful. It's spring break.
Yeah.
Everyone, we should talk about it. They should come down and visit us on Saturday, right?
Yes.
But man, thankfully we're having the workshop on Saturday morning, because Friday afternoon there is some traffic around here, and just sitting staring at the cars. It's just, you know, you got spring break. You got the beautiful beaches. You have spring break around here
spring
for kids.
training.
Spring training, right? And actually, as you even say that, the day I'm talking about, you know, we have the Phillies right next to us. I thought I was going to take a shortcut, and I go by, and you know, there's a Phillies spring training game, of course. So then,
yesterday?
Friday this was.
Yeah.
Started a nice Friday commute with, you know, in a baseball traffic jam for 20
Red
minutes.
and white shirts everywhere.
Everywhere,
folks.
Phillies fans.
Everywhere.
Watch out.
You gotta love it. So, let's go take a look at the gold is just laying there at 1,200. Silver, let's go take a look at silver, SIK, because silver was a little weak yesterday. Yeah, so you can see silver's under the swing from last week, which was 1685, well, 1689, I guess. That's funny, it looks like it's under it, but it's not. But it's 25,000 contracts. Silver cycle, but so the problem with silver here is that that spike from 950 this morning, that has volume, so it's like that's not done. That looks like it wants to go down there again. So we come into this 2 o'clock time frame. The rates. You know what's so wild is that when you actually do think about it. From 2006 or 2017 right now.
That's the 11 years, right?
That's 11 years. And that is almost hard to comprehend.
Yeah, I mean, can you imagine if people had said to everyone in 2006, you know, we might see 3 rate hikes in the next 11 years, you know? Everyone would be like, that can't be real. What's going to be going on for
They put you in a cracker factory.
That's what, for the Fed to have
there's no doubt.
a decade plus of zero interest rate environment, seriously?
Right.
I mean, you'd be thinking the country was really in trouble, right? I mean, where would you wouldn't think that the Dow would be at 21,000, I bet. And they'd say, maybe we'll see 3 rate hikes by the time we reach 21,000 in the Dow.
Right.
Yeah.
Well, the thing that's going to be intriguing is the aspect that what does happen if it does get into a normal situation that the 10-year, you know, let's say 2 or 3 years from now, is the 10-year going to be at like 4%? You know,
sure.
That would, you know.
No, and
so
there's a lot of implications across the board, right?
In this context,
loans and consumer loans and credit card loans that are out there.
You need 6 rate hikes.
4%.
Probably not. Yeah, to be at 4%.
Right. If they all just went right to it, right?
Yeah.
Yeah.
And in a couple of years, why couldn't you have that? Well, you couldn't have it, folks, if the market turns around and starts taking conniptions, which the market has not. The only market that has taken conniptions is the gold and silver market, and you know that's the only market I've seen thus far that's paying attention to rate hikes.
Sure.
You know, and that case is very easy to make because the bottom line is that, you know, if the dollar goes higher, commodities go lower. But if you were a fundamentalist, that case is just as easy to make, because what happens is that a fundamentalist looks at, you know, how much earnings does the S&P make, the S&P 500, and what most of these analysts do is say, okay, we think that it's going to raise by a certain amount, so the S&P can be from 14 to like 19x of you know what they're making. Well, we're at the very high end of that. We're not at 19. We're like 17.5 in the night.
Okay, I don't know the numbers at all.
So what would happen is that if, in fact, you know, that all companies have to pay more money, well, guess what? If you pay more money, you're not going to bring that money, you know, that earnings down to the bottom line.
Yeah,
so,
definitely.
Going to be pretty wild watching this. Yeah, let's go look at that oil. Some of the Tigers
some activity. We should do.
Oh, look at that. See that? They must have been listening to you, Tom.
Can't bust them
that
up,
must have did
bust
it.
them down.
Totally. And that makes sense that it couldn't move higher.
Yeah, on news of 3 million barrel miss, right?
Right.
Now it is interesting, even looking at that trade. So 48.50 was going to be the pivot point if we were going to have to do that. So we were 20 cents
and
above it.
And we still needed $42.
Exactly. So we'd still be in a deep losing position with only about $18 of value of that coming into about 10 minutes till expiration. Now see if it continues down. But
and that volatility trade was the 11 o'clock one, folks.
Right. That's it. So you'd only have the 10 minutes, right? And that's what. Yeah.
Now, what will happen is that because oil's still getting pressure, let's go over to the because this XLE and Chevron was the leader on the way down yesterday. Let's go take a look at Chevron, CVX, and Chevron. It's flat out here this morning. But you can see Chevron broke a B point with volume yesterday. Chevron's a nice ABC down. It got as high as a 108.12 today. Now you're at 107.67. If we go take a look at Exxon, Exxon's laying at those lows. Tillerson get out right in time, I think. It's actually, when you actually look at this, it's been in this consolidation for, look at how long.
Yeah.
We bring it back. Oh my God, that's 2006.
Yeah.
So it's been the same place since 2007.
Yeah.
It's
not that bad when you think about the woes that oil has been through to have a relatively tight range when oil's going from 27 to 1 whatever, right? What was that?
Look at this, printed money. $302 billion a year they take in right now.
It is interesting, though. I mean, check out 2013 when they were rolling in it. Yeah, and check out that earnings number when they were rolling in it.
So 2013, folks, is $438 billion.
And look at the earnings, though, even quadruple what they made in 2016 per share.
Yeah, $7 versus $200.36. That's intense.
Yeah.
You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow right now is up 29. You get the Nasdaq up 4. S&Ps are up 4. And as you come over to our website at TFNN, folks, you're going to see it. We're coming up to Saturday.
I know. It's amazing. Time flies.
We're here. It's Wednesday. So we got a live event happening. It's going to be March 18th at the Westin in Tampa. We're going to start at 7:30 in the morning, 7:30, 8:30, continental breakfast, check-in. Dan Cook from Nadex is going to be speaking for 15 minutes from 8:30 to 8:45. I will do the first 75-minute session, and that's going to be on quality volume, cause and effect, and measured moves in the marketplace. We'll take a quick break. We're going to do another 75 minutes with swing points, testing, and then a Tiger Gottlieb buy and sells.
Then we got 45 minutes, and then we got our Tiger Social Luncheon Rooftop.
Exactly.
Get together. It should be good.
So come visit us, folks. You get a great education. We'll have a nice social. We will take care of the lunch. Nadex is taking care of everything else, and it's a cash bar on the roof. And it's going to be, and it's going to be gorgeous, folks.
It is going to be gorgeous. I think it's going to be like 75 degrees and cool and sunny.
Exactly.
Man,
so get on the plane, and I want to thank Tiger Tim up there in Boston. I get these pictures up later on my laptop. He sent me some pictures of the storm north of Boston.
Weatherman sending you pictures?
No, this is another Tiger. And they're great pictures. Yeah. Oh my God, they got a lot of snow.
They did.
They got a lot of snow, man. Yeah.
Hopefully everyone stays safe. Not too much ice up there, right? Be careful because it's cold. It's cold up there still. Yeah. Just like in Chicago, it's cold. It's cold in Boston, so they're gonna take a little bit for that to melt.
Yeah, March 17th, right around the corner though. That's the pot of gold. So. For all you gold bulls out here, I suspect that Janet Yellen she might have green on today. We'll find out. Seriously, right?
Right.
Hey, you never know. And as we started the program, the Nadex, the Nasdaq folks is the weak link out here today. Now, what's so wild is that yesterday you had the small caps being the weak link, and then the small caps they said, I'm going back up again anyway. I don't care. You know what I mean?
Yeah, they are, right?
They are. And so if we go over and we look at this, what I'd be looking for the small caps today is this. If that thing can close under 136.79, that'd be a good situation. It hasn't hit there yet, but where I'm going is that was the high that was on Monday and it couldn't handle it. And then you put that together with the aspect that the NASDAQ is showing some weakness today. It's like, okay,
sure.
Small cap showed weakness yesterday. NASDAQ showing weakness today. You know, you start putting these together little by little, you get some action.
You know, one last thing I was thinking about during the break, trading those Nadex, maybe in the NASDAQ 100.
For
this afternoon. That I didn't point out that's totally a possibility in these, right? So 53.85 was the point we were using.
Yes.
And we had the short one and we had the long one. Now this is a chance, you know, you'd say you'd be risking, I think it was 180 we're paying, right, combined.
That's correct.
And they're each worth 300. So if you just let one of them expire in the money, it's $300, right? But this is a chance you could get a 30-point swing prior to the news. And then you know from experience, and this is why, you know, even if you're not trading it, this would be a good time to check it out, because I know that there'd probably be, maybe I can get $210, $220 of the full value. Like if this, let's say this moved from 53.85 down to 53.55, right?
Yes.
Well, I know then that I'm going to probably be able to, there's still going to be premium in there, right? But you could probably get out and take $220 of value off one side.
Right.
And then if you forever got, you know, a run up those 22 points and then a run up even further, you could take money on the other side. So you could have a day where you get maybe $500 of that, where you take $200 off on one side when you get a huge move, and then the other side comes back to full value. Just on a day like today, that could be.
With the Fed days, when would it happen?
Because we've already had a couple points of movement right now. You have exposure where you could maybe, if it moves prior to the news, you take the value, you at least break even, and you look for a rebound for the rest of the day.
And on these Fed days, you know, many people say wherever the first move is, don't pay attention to it. You know what I mean?
For sure.
Stay right there. I'm in. Mr. Basil Chapman's coming up next. Then, of course, we're going to Chicago. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Fed, 2 o'clock.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.